very much for joining us on this panel discussion on e-commerce. My name is Aradhana. I'm a reporter with Reuters News, and I will be moderating our panel this morning. Our participants come from across the e-commerce ecosystem and cover different parts of Asia, so it would be great because we can hear a variety of different perspectives. So we have Swati Bhargava, who's co-founder of coupon and cashback site CashKaro, Sarabjit Singh, an associate partner with McKinsey, Joel Yarbrough, VP Asia Pacific from Rapyd, which is the payments network company, Thomson, the CEO of REIT EC World, and Akshay Garg, who's co-founder and CEO of fintech firm FinAccel. I plan to kick off with a few questions, but if anyone watching wants to ask a question of our panelists, you can do so through the Q&A button at the bottom of your Zoom screen. The topic for our panel this morning is, has e-commerce received a booster shot? I think this is a really timely topic and is looking at whether COVID-19 and all the related lockdowns and social distancing, with all of that, will people continue to stay at home and shop from home? So the first question is, has the COVID-19 pandemic boosted the adoption and growth of e-commerce? Swati, I wonder if you could take a first stab at this. What are you seeing in India? And after that, Sarabjit, it would be good to hear your take on this, especially what is happening in an emerging market like Myanmar. Are some of the clients extra motivated to go online faster?
Great. Yeah, thank you so much, and happy to be here with everybody. Doing virtual conferences now, that's the new way of life. So I'll just give you a quick background first on what we do, so it'll set it in context. So at CashKaro, we work with all the e-commerce sites in India, about 1,000 of them, including Amazon, Flipkart, and all the vertical players also, whether it's a Pepperfry in furniture or Big Basket. So we get a good sense of what's happening in e-commerce across the board. And what we've seen is that e-commerce has gone through its ups and downs because there are lots of supply challenges as well. It's not just about we are not going offline, so we should all shop online. So how e-commerce started in India with respect to lockdown is that when 25th of March, India went into lockdown, e-commerce was pretty much on pause, and essentials, non-essentials, everything was a problem in getting delivered. And then gradually in April, things started opening up and essentials were getting delivered to most places in India. But wherever there are active COVID cases, they are called red zones, and there are containment zones. So delivery of non-essentials was also not happening there. This weekend, with the new revised set of rules from the government, essentials and non-essentials are allowed to be delivered all over India. So e-commerce is opening up from a regulatory perspective as well, when it comes to COVID. But wherever there are containment zones, again, some things can't be delivered. So on one hand, the demand has really gone up because people are not going in stores as much. And in fact, at CashKaro, we did a survey last week where we found out that over 80% of our respondents, 1,000 people who are active shoppers on CashKaro, they said that it will be a few months before we go out and shop, because we will be so scared, and if e-commerce can continue to deliver things we need at home, then we don't have a reason to go outside. Anyways, there is more variety and there are more discounts online, so those factors are also into play. So on one hand, we have higher demand, but on the other hand, there are delivery issues, there are supply issues. Even the workforce, people who actually deliver couriers, they're scared of catching COVID as well. So for a long time, they've also said, no, our families don't want us to do this job, so we need something else. So there are lots of, and then the third factor coming into the mix is the macro environment. There is a slightly recessionary environment setting into India. I mean, Goldman Sachs is saying this whole year is going to be terrible from that perspective. So people are pulling back a little bit on discretionary spend. Essentials are definitely going up. So there are all these three factors that sort of have to be taken into account when we look at e-commerce in India.
Thank you. I'll take this over. Aradhana, can you hear me?
Yes, very clearly.
Hi, morning, everyone. Swati's mentioned a number of points already. I'll start my answer with a short one, which is, has the growth been accelerated? Yes, but with nuances. I'll just mention a couple of points in addition to what Swati's mentioned. One is, if we look at it from a market's perspective overall, companies and public companies and their performance since the start of the year, across the board, on average, the shareholder returns in every sector have dropped. It's been a terrible time for all companies. If we look at the full range, though, the 90th percentile of all performance, there are some companies that have done better, in fact, found growth in this period, and they are in healthcare, tech, and in e-commerce. So e-commerce has emerged as an area. A few other data points are when we've also done consumer surveys, we've found similar results. A lot of people are spending more time online. In India, for example, Swati, we did a survey, 80% of customers have said that they've increased or started new digital habits. In Indonesia, 30 to 40% of people are now buying more on online marketplaces or groceries. So for sure, there's higher demand. But indeed, with the supply and the operational challenges that Swati has hinted on as well.
Perfect. Thank you so much.
And Aradhana, if I could add a caveat to that, these are actually short-term challenges. I think longer-term e-commerce has definitely got a booster shot. And then that is the view that, most of us are trying to build our business towards. These are short-term, ups and downs, which will happen. But longer-term, yeah, it's positive.
All right, fantastic. Thank you so much. And that, you've spoken about the logistical challenges that have faced the e-commerce businesses, which brings us to EC World, which is the warehousing company. They have warehouses serving e-commerce tenants in China. So Thomson, many are looking at China for clues about what a recovery could look like in their own home markets. So I wondered if you can tell us a little bit about what your clients are telling you. Have they seen an increase in demand since lockdown has eased in some of the Chinese markets? And also, do you see any sort of changes that are needed in warehousing and logistics operations because of COVID-19, because of, say, safety and hygiene considerations?
Thank you. I think we are a REIT listed in Singapore with logistic warehouse and supply chain management in Hangzhou and Wuhan. Actually, Wuhan was the epicenter of the epidemic. So for our Wuhan, even during the COVID-19, JD.com was our customer. They continue to operate some of the businesses, throughout the period, to serve, food and other medical items, that are essential. Now, overall, during the COVID, because of the lockdown, so like, Swati say, there are problems with workers because and it was during the Chinese New Year period, people went back to their hometown and especially those from Hubei province, after the lockdown, they couldn't return to other cities to operate. So for us, the operations were affected, but we are the REIT, so we're not so much affected, but our tenants and their business because the workers couldn't come back. Now, after March, and in March, the government approved the reopening of their businesses. So we see gradually, business return to, normal, albeit quite slow, and until now we see that almost 95 to 100% of their businesses are back to normal. And during this period, the problem really were workers couldn't come back. So now we have seen that workers will come back. The other point I want to share is that one of our very interesting customers is called LST. It's a platform under Alibaba, serving all the moms and pop shops and convenience stores. Now, as we know, there are now about 6 million such convenience stores in China, right? So what they have done is that they are using this platform to serve this convenience store to order their items, and then instead of ordering from different distributors, now they are able to group all the distributors under the same platform, and then that would deliver to the warehouse. So in a nutshell, it's like instead of 20 warehouse, 20 trucks you now can combine all 20 items into one warehouse and one truck. So you can see the optimization in terms of, you know, logistic management. So this platform has grown very well, and that even during the epidemic, we saw that this convenience store, 50% of them were in business. You know, so you can see the kind of services that offer, and that they even now start something called brand alliance. You know, that means the big brands will help this small, you know, convenience store to survive, you know, during the epidemic, and that we see this trend is going to continue to grow. You know, they are already, even during the epidemic, they were doing something like 2 billion RMB of business during this time. So they were serving, you know, 193 cities and more than 13,000 townships in China. So we see that this trend will continue. You know, the people are focusing, a lot of food and essential items will be more online. You know, people are getting used to this habit. And in China, we know there are about 900 million, you know, internet users. So even before the COVID situation, you know, the e-commerce has been growing. I mean, probably, arguably the fastest in the world, right, for e-commerce in China. So we see that this trend will be even more accelerated after, you know, COVID, as Swati said. You know, well, yeah, that's what my sharing here.
Yeah, that's fantastic. It also shows us the way about how companies could adapt in the future. From warehouses, we come to other key enablers of e-commerce, which is the availability of credit and digital payments. This has been a challenge, especially in some countries of Southeast Asia. So I wonder, Joel and Akshay, this one is for you. How much has the development of the digital payments ecosystem and access to credit in Asia boosted e-commerce? And also, is COVID-19 pushing consumers and businesses to adopt digital payments faster? Maybe Joel, you can go first, and then Akshay, or either ways.
Sure. Thank you, Akshay, in advance. I would say there's no question, right? When you think about the thin end of the wedge, consumers don't want to use cash. They're not obviously a lot of people don't want to accept cash. Even your delivery guys would prefer not to have it in a lot of cases. So we're definitely seeing a big adoption, both of wallets that were already out there, bank-led digital payments, payment standards like PayNow, UPI, PromptPay, et cetera, are all just jumping off the charts, right? Because people are, were marginal users or barely users before, and now it's a vital component of getting the basics done. At the other end of the equation is, how do you pay your drivers, right? You have this huge pool of people that have entered the funnel who may or may not have been very ready to receive money very quickly in the prior days. How do you pay them, right? If they're fully banked, perhaps there's not a problem. If they've had to download an e-wallet to get paid, how do you pay them efficiently? So the infrastructure of both collecting payments is boosted. How do you do the payouts? That's all on the big upswing as well. Then I think the thing that's in the middle that isn't yet, we haven't yet really seen, is the TOSIM portion of the equation, is a lot more logistics services, a lot more wholesaling in the middle. How does the entire value chain come together much more seamlessly? Because I think there's no question that we're not going to go back to the levels of face-to-face commerce we saw before. We will have a very, very high level, as Swati said, of e-commerce going forward into the future, which means we're really just at the front end of the chain where the entire ecosystem has to shift to digital, which I think then does a nice handoff to Akshay, which is one of the hardest parts of that entire value chain, is the presence of credit at each one of those nodes to smooth the cycle.
Okay, thanks, Joel. The question that I'll tackle, right, Aradhana, is really around access to credit and how has, the recent COVID-19 crisis really impacted, that part of user behavior, just in terms of both demand as well as supply. Look, just starting out, first of all, when we look at emerging Asia, I think structurally one of the biggest problems that companies like ours have been trying to solve for is provide access to credit in the face of very little credit bureau data, right? The vast majority of emerging Asia, right, is individuals with very poor credit bureau coverage. And even if they are covered by the credit bureaus, typically these are thin file customers. So banks and traditional financial organizations don't really give them access to unsecured credit. And this is where we come in, right? I mean, we look at a lot of data across a customer's digital footprint and qualify them in real time. Just to put this in perspective now, we are the single largest by far, right, digital credit platform for e-commerce in Indonesia. We're plugged into 9 out of the top 10 and nearly 300 e-commerce merchants. Now, has demand for credit for e-commerce accelerated, right, as a secular trend over the last few years? Oh, absolutely. I mean, in a country like Indonesia where we operate, you're talking about a population which is 250 million people, but less than 8 million actually have traditional credit cards, right? That's 2.5% right there. Opens up a massive market opportunity for a lot of underserved but creditworthy individuals to apply to platforms like ours and others as well and get access to credit. Now, that's been a very clear secular growth wave over the last few years. How has COVID-19 really kind of like, impacted this, or what's the connection between the two? Now, this is a slightly complex dynamic, right? On one side, let's face it, we're dealing with, regardless of whatever's happening in the stock markets right now, one of the gravest economic crises of our lifetimes. I mean, unemployment rates in the US are higher than what they were during the Great Depression, at least as per the most recent claims. The European Union, Europe is actually about to go through the deepest economic recession right after the Second World War. I don't think the full force of that has actually hit emerging Asia yet, or at least the metrics haven't come out yet to support those same conclusions. But it's a very deep economic slowdown. No questions asked. Sorry, no question about it. What's the consequence of that? One, as people are under economic stress, will demand for credit go up? Absolutely. As people are losing jobs, right, or facing uncertainty around their paychecks, more people will apply for credit. Now, does that demand necessarily get matched by supply? Not necessarily true. I think when you're actually going through a credit downturn, right, as any prudent lender would do, I think you tighten underwriting, right? You start revising your models, right? Because people who are, or customers who are historically, let's say, low to mid risk might turn into higher risk customers now. So even for existing customers, you've essentially got to tighten up in part in terms of what you actually disburse. So broadly speaking, what we're seeing in the market, right, and we're no exception here, is that certain players have completely stopped disbursing in the digital lending ecosystem, right? A lot of banks in the market have completely stopped, right, new credit card applications, right, or giving credit limit increases. In our case, we're still actively disbursing, but we're tightening up, underwriting parameters, which is to say accepting a smaller number of customers, right, who meet a higher threshold, right, just so that we can actually limit disbursals to essentially what we think are the safest customers during this period. So yes, we are seeing demand. I think, look, let's face it, I think there is a shrinkage of supply during this time period simply because there's more people defaulting and there's a higher stress on most portfolios. Now, again, this is temporary. I think our view is that once we're past this, I think we're back on this secular growth wave, which has gotten a structural boost, I think, through kind of like the stay-at-home measures that have been implemented by most governments.
Perfect. Thanks so much. We have a question come through from the audience. What key structural changes have you seen to have been enforced in e-commerce business models as a result of COVID-19? Anyone care to take that one? Any structural changes you've seen that have been enforced in the e-commerce business?
Maybe I can start with one, which is in discussions with my clients, I'm finding they're having to think much more about the reliability of the supply chains than before. So earlier it's the world, I would say, was optimized for efficiency, not for redundancy, as you may have heard as well in similar terms elsewhere, which means somehow or the other, I'll get access to the products I'm selling and then be able to move them to my customers. The challenge now, of course, has been with the lockdowns and borders being shut down is, in Myanmar, for example, trade from China is trickled down. And this is a time when customers need products. So if you're an e-commerce provider, just being online doesn't help because you're unable to fulfill those requests, and it hurts you in the short term. It also hurts in the long term because customers are also indicating in surveys that they're shifting brand preferences based on who's really going to help them in these times. So as a structural change, really, players that survive and do well will need to think about how do they secure their supply chains in ways that they can ensure and the ability to meet customers' demands no matter what the conditions.
Got it. All right. Did anybody else want to give this a shot, or I can move on to the next question?
Sorry. Well, just to kind of like add on to that. In fact, I think a few of us in the e-commerce world, have been talking about this in the last 1 week. I think, as some of you are aware, the one, very large e-commerce company in the region, which is Shopee, owned by the C Group, right, publicly listed company. So they just came out with their Q1 results. And I think one of the things that's really caused a flutter everywhere is, and this is public information, so I'm not disclosing anything confidential, but they actually announced that something like 60 to 65% of all transactions done on the Shopee Indonesia platform, this is public news, were actually done through their e-commerce, through their proprietary wallet. Now, when we think about wallets, at least in a market like Indonesia, that's Shopee, Dana, right, Ovo. I think the one really big sort of structural change that's happened the last 1.5 months is, I think the adoption of digital wallets has just kind of like shot up through the roof. I think historically in a market where bank transfers were the single biggest payment channel, right, online banking, I think that's completely switched over. I think within 1 quarter, we've actually gone from wallets probably being, 1/3 of the market share for payments to now anywhere between 2/3 to 3/4 across most of the top e-commerce platforms. And that's a pretty radical shift in terms of customer behavior. I think, and I'm sure there's a lot more news that will come out around this as more and more information becomes publicly available over the next quarter or so.
Actually, I'd just like to add that's so true in India as well, because many e-commerce sites now have actually written on their website that they're not accepting cash on delivery, because cash on delivery is maybe a unique-ish phenomena to India, and it was also responsible for starting e-commerce in the first place. But now there is also a concept that, the virus can travel through the notes as well. So people are adopting digital much more than ever before.
Yeah, that said, I'll come up with a counterexample, though, not to payments necessarily, but is the sort of platformization, right? So the assumption that I think most people would have made is that food delivery platforms, e-commerce platforms, et cetera, will kind of reap all of the reward. I think what you're seeing in Singapore and a lot of other markets is a rebellion against paying extremely high commissions, right, to platforms, and a democratization where retailers are rolling their own platform. Right, they're adopting Pay Now or UPI directly as a way to get paid, and kind of dealing with all the negative distribution, logistics, and the lack of the e-commerce platform in order to save the money. Right, the cost is that much more fundamental to them. So I think you're seeing a lot of very small platforms like Audl, the restaurant platform, shooting through the roof. GetBody, a messaging platform, so people can order. Restaurants can do order and delivery through Messenger and WhatsApp through the roof. These things that were kind of below the surface popping up. Whereas the big boys that had all the scale, to be honest, I think not prospering as much as you would think, because people are much more aware of the cost structure, and the buyers themselves are aware of the cost structure and are willing to do something unnatural to help the restaurant or the merchant save money.
Since we've been talking about digital wallets, one thing I've always wondered is, one of the issues in Southeast Asia is that the market is quite crowded. And I just wondered if that is seen as a challenge. Right now, it seems like people are using, Akshay, you've alluded to this, that people seem to be using a lot more of the digital wallets to make payments and buy things online. But I just wondered if, could that also be a challenge for e-commerce, if there are just too many digital wallets, people are confused? And do you think COVID-19 will sort of push a sort of consolidation in the market?
I mean, I'm happy to give you my view, but by no means am I a forecaster, right? Look, I mean, I think it's very clear. I mean, we haven't seen the end point of this, right? I mean, I think sometimes we forget that we're still at the very early sort of stages of what is a decades-long journey, right, to transform essentially the majority of retail into digital, or into e-commerce, for lack of a better word, right? I think right now what we do see is that most of the large marketplaces typically use their proprietary wallets, right? Or within, let's say, their family of investors and so on. So you'll see Shopee use Shopee Pay, which is their own licensed wallet, right? Someone like Tokopedia will primarily use Ovo. right? Bukalapak, Lazada primarily use Dana, right, in the Alibaba ecosystem, since they're either owned by them or Alibaba is a very major investor there. Structurally, I personally think, and I think someone like Joel, who's an expert in payments, I think probably has more, will know this better than I would. But in general, look, I mean, customers don't like having 20 different options, right? I mean, there is a switching cost involved, for sure, as small as it is. Are we moving towards a world where over a period of time, there will be some consolidation and, might be one super wallet that trusts all, or there's a seamless interchange amongst all these wallets that allows customers to switch between them, switch their storehouse of value between them, even without switching wallets? Absolutely. Right? But I don't think we're at that endpoint just yet. I think, at least for the time being, what we are seeing is that each major platform has its own wallet. And I think the big shift that's happened is that even as recently as 1 or 2 years ago, the majority of online payments, right, for e-commerce platforms is really happening through a bank transfer. That part is now actually switched from a bank transfer to a wallet as being the storehouse of value, right? I personally think it's going to continue this way for at least the next couple of years, and then there will be some sort of further layer of consolidation in the next few years. But what do I know?
Well, for the China experience, I think the main thing is that it's because of the mobile applications or the apps, right? It has changed the situation completely from before. Digitization is much more developed with the mobile phone, and with the mobile payments, the e-payments, like Michelle just now presentation, right, for JD.com and Alibaba, their Alipay, and also the Tencent. So there's no issue in China about e-payments or even using pervasiveness of digitization because of the mobile, because of mobile app. Another point about just now when I said about the LST platform, they could develop it because of mobile app. Because imagine a mom and pop shop, the operator, it's very hard for them to use computer. But mobile app is so easy, they just place their order. So it's a big transformation.
Yeah, I would say, having worked at two big payment companies that wish there was consolidation, I think there's very, very little evidence of it really happening in almost any market around the world without massive promotion or, as Tosim said, ecosystem-based consolidation, where one platform like Shopee or Ali can kind of drive behavior just within their own walls. I think the big winner, to Swati's example, is actually UPI. It's actually standards, right? Prompt Pay runs across most of the banks and half the wallets. UPI is basically ubiquitous across banks and wallets in India. Any market where the regulators have stepped in and created that type of interoperability, I think that's where you're seeing the overwhelming adoption curve and the preference for the behavior at all. The Google Pay story is a great story, but the reality is it's a UPI story, not a Google story, right? They have a great UI on top of a great API. Markets where that hasn't happened, where the rails are still basically proprietary, you're seeing this kind of fight out, which is the Indonesia example, but they're all subsidized, right? The cost structures are extremely low. Everyone's burning money. You're driving subsidies. That's not really how the market shakes out long term. What will ultimately change it long term is cost structure changes and standardization changes so that adoption can go everywhere, whether it's to less sophisticated hawkers that are afraid of other solutions, or very sophisticated platforms that really don't care. They just want money to come in the door. That interoperability, I think, is really a critical component to seeing the broad-based adoption. I mean, even today, prior to the virus, right, e-com out of China is really basically a $3 trillion business out of a $21 trillion offline business, right? The real world is plus $150 trillion of B2B transactions. So you're talking about a very, very small slice of the market, whereas most of the market hasn't been touched yet.
Perfect. So we're coming up on our time, but I wondered if everybody's all right and we could just go over by a couple of minutes. This can be my final question to all the panelists. If you could each spend maybe 30 or 40 seconds each talking about what do you think is the biggest risk or for e-commerce in this current environment, biggest risk or challenge for e-commerce in this current environment.
Well, I'll go first, given you want to follow the order before. I think it's about, well, if COVID continues to spread a lot, let's say in India, and we have more and more containment zones, and more red zones, I think that is a problem because right now, for example, some of our partners, which are the largest e-commerce sites in India, are saying to us, don't give us more orders. We can't handle it because when we get so many orders, we go there, try to deliver, the government doesn't let us, we have to come back. So, there's a lot of bleed in our system. So of course, the first thing is that COVID just has to stop spreading as much. The supply side issues are there more. And the other risk obviously is that if the macro recession really sets in, because then people just, don't want to spend money. I'll stop at that.
Are you going in order?
Sorry, after you.
Akshay.
Sorry.
Go ahead, man. You raised your hand.
Well, I did. That was just me speaking. Okay, well, just in the interest of time, really quickly, one, I think I'll echo a little bit of what Sarabjit started out with, right? I think what we really are seeing is a huge amount of digitization getting compressed into a very small time frame, right? And I think some things are easier to solve, but I think things like, fixing your supply chain, logistics, right, warehousing, right, takes a little bit longer. I think, a bunch of e-commerce companies will need to get this sorted, right? Otherwise, they might be at risk of essentially in the longer term, just from a customer experience basis, or customer experience perspective, losing their share relative to some others. I think the one other risk I just want to highlight is, it's kind of interesting. The narrative everywhere is, oh my God, e-commerce sort of, penetration shooting through the roof. That's true. I think at a percentage of population level. But I think what's getting missed through the narrative is that the deep amount of economic stress is also actually really the percentage of high value transactions that are being done by customers. Right? I mean, we're live across all the major e-commerce platforms in Indonesia. When we look at our data, and when we talk to a lot of these e-commerce platforms, it's very clear. There's a higher number of people transacting, but there is a huge shift currently in terms of there being a preponderance towards smaller value transactions, mobile phone top-ups, right, food takeaways. But because of the economic stress, people are, postponing or pulling back from high value purchases. It's very possible, by the way, that overall transaction value, right, might be coming down, right, even though the number of transactions and percentage of the population that's transacting is actually going up. So I think one very real risk is that I think just from a growth perspective, right, I mean, growth might taper off, right, if this economic sort of depression, if it really turns into a depression in this part of the world versus the temporary recession that most people are actually forecasting. And I think only time will tell how deep the slowdown will be.
So for me, I'll just keep it short. I'll talk about fraud as a challenge. With a lot more people coming online, buying and selling, especially in markets like Myanmar and other emerging markets where regulation is still weak, there's just higher chances of orders being placed but no goods, or the quality not keeping up, or even linked to cybersecurity with these new e-commerce websites not having the secured systems in place.
Thomson?
Yes, I totally agree that fraud and cybersecurity is an issue. So for me, in China, I think it's the tax structure. I think in terms of e-commerce, how do you handle corporate tax, business tax, and all this? That government has been, allowing that to, without intervening. So that if one day there's, review of the total tax structure, then things might change here.
Yeah, I would say fundamentally the biggest problem or the biggest risk is actually going to be overconfidence, right? This is a great opportunity for platforms to get things right, to invest in their tech, to smooth the cycle, to really start to get this motor whirring. But if you look at the Spanish flu of 1918, we should make the assumption that it's going to be 8 times worse, 10 months from now than it is today, right? And so people that think they're weathering the storm today are probably in for a really awful situation. We're probably all in for a really awful situation. So I think the idea that we're kind of getting it all right is probably overconfidence on all of our parts. And people need to be really thinking about if it's much, much worse, whether there's no delivery personnel, I can't staff my warehouse, I can't deliver to my customers, I have no supply, whatever it is, how will they deal with those truly negative externalities and how they get impacted by them? Because I think it will, very high probability of it being much, much worse than it is today.
I'm being signaled by the organizers that if you are all okay, maybe we can go on for the 5 minutes. So I just wondered if that's all right, and I can take a few questions from the audience again. Maybe this one is for Thomson. Wellington asks, for warehouse, do you see social distancing reducing the space utilization? Perhaps you'd like to take that?
Well, in terms of warehouse management, much of that is computerized, digitized, with barcode, everything. So a lot of high technology into the management of warehouse. We call that, in our system, we have 3 different types of, system that manage the warehouse. We call OMS, that's, manage the warehouse, and also order management system, and then warehouse management system, and also delivery transport management system. So it's all integrated. In terms of manpower, I think it's all quite well managed. In terms of the e-commerce warehouse, you have people who pick and pack, so they observe their social distancing. So there's no issue, because warehouse is quite large. It's not very cramped. You have more rack space than people. Yeah.
Got it. And one more question from the audience. Do you see cryptocurrency coming in soon to replace payment platforms? Who would like to take that? Joel?
Sure. I would say realistically, I don't, right? I think what you're seeing is, digital liquidity will get passed through standards-based payments, whether that's a wallet, as we said, national payment schemes, et cetera. So the message will be digital. The payment will be digital at an increasing rate. But the underlying currency, there's really not a lot of forces that are going to make them go to a cryptocurrency other than a national currency, a fiat currency. Because the reality is most transactions are domestic. Cross-border, even in any sector, really is just not that large of a piece of the pie, having been in e-commerce for a very long time. So people are getting paid electronically, they're getting paid into a wallet or a basic bank account or traditional bank account in their home market, and you have an interoperable way to pay. There's really not a problem to be solved by crypto in that sense. If I'm looking at the consumer credit business, right, that Akshay is in, they're going to be lending in fiat for a long time to come. And that just is one more source of liquidity that will stay on those rails. Crypto doesn't really solve a problem in the short term that fiat, the digital fiat, doesn't solve as well.
Well, China is testing digital currency in 4 cities. That means this digital currency is issued by central bank, not by Alibaba or Tencent.
Yeah, and even in that case, it's a digital yuan, right? So will the digital dollar, the digital Sing dollar, those will be great, right? But what's the difference to a normal person versus getting paid into a bank account? There's not much difference other than the rail in the back end.
All right, perfect. Thank you so much. This was really helpful, and we've come to the end of our session. Thank you to our panelists for all their insights, and also to Smartkarma for organizing the conference, and the audience for listening in. I hope everybody found it interesting.
Thank you, Rana.
Thank you for the opportunity.
Everyone.
Yeah,
Bye.
bye-bye.
Take care.